Yeah, hi, Mahima. Good afternoon. Yes, Nifty reality, we had seen a little bit downfall earlier. The reason was that, the rent prices were actually going down across the cities, and or maybe you can say the stagnant, and that's why it was going down. But if you see the quarterly updates whichever coming are quite encouraging for the few counters, especially like no, I like one of the counter is Sobha. No, they have given a very good numbers, and they have given a very good uptick. Also, the no overall their segment is going to grow. Whatever if you see their luxury segment also going to grow, even the affordable. So that is where no, I think Sobha is also one peak. Even I am thinking about all another counter is DLF. DLF has also given a good you can say the guidance overall for the next you can say 2 quarters and all. And no, the pre-selling is also done well. So but we have to be very select in reality. But no, the interest rate cut will come in future, and I think that will impact. And also the cement prices because of GST cut, that will help to cost to go down. So the margin may increase eventually, maybe from next quarter onwards. But as a reality, I think you can start no slowly and gradually few counters you can start buying some of the names which I already given. In that counter, I am positive.
Okay, so that's with regards to where real estate space goes. Thank you, Tapan, for that. In fact, another stock that is buzzing in trade is a Tata Steel. It's very interesting because it's the metal pack which is up and about in trade. But Tata Steel, the top gainer on Nifty 50 in today's session, stock at the day's highest levels. Vansh joins us with more as to what he's picking up. Vansh, multiple upgrades that have come in for a Tata Steel. Help us understand what's happening.
Well, yes, thank you for that, Hiral. So multiple brokerages have upgraded the Tata Steel. If you look at the Motilal Oswal, they have upgraded the stock with a buy rating from the neutral with a target price of 210 rupees. We have Incred that has upgraded their rating to add from the earlier rating of reduced. They have also hiked their target price to 224 rupees from the earlier 82 rupees mark. And lastly, we have Nomura. They have also initiated the coverage, and they have maintained and buy with a target price of 215 rupees on the stock as well. Now let's also look what the analyst community is anticipating for this stock. Over the last 2 months, what we have seen that the return potential for Tata Steel has turned negative from that positive 8% mark. Now this is on the back of the run up that the stock has already seen. In fact, if we look at the analyst recommendations, we have 26 analysts covering the stock. Look what the analyst community is anticipating for this stock. Over the last 2 months, what we have seen that the return potential for Tata Steel has turned negative from that positive 8% mark. Now this is on the back of the run up that the stock has already seen. In fact, if we look at the analyst recommendations, we have 26 analysts covering the stock with a buy rating on the stock with a return potential of just negative 1.2% of 12.18 in terms of EV to EBITDA. If we look at the 1 year average, it's 11.4, and in terms of 3 years average, it's 9.25. So clearly the valuations are looking premium in terms of EV to EBITDA. But if we get to the main part, what's working for a Tata Steel? Firstly, the EU proposal that is to double the tariffs to 50% is aiding the steel prices in Europe. In fact, the higher steel prices are favorable for the European operations of Tata Steel. In fact, we have also recently heard that ArcelorMittal, that is the European giant, has already hiked their hot roll coil prices for steel by 3 to 6% for December and Jan 2026 deliveries as well. Also, if you look at the analysts, they are expecting the EBITDA per ton from the Europe operations to reach that $70 mark by FY28. They are expecting the EBITDA to be aided by the shutdown in the UK blast furnace and the ramp up in the Netherlands plant as well. Also, if we talk about the recovery, now the European recovery is on the cards. This is what the analysts are anticipating, and the strong domestic demand with the capacity expansion by FY30 are some of the pointers that is fueling the rally for Tata Steel as well.
So that's with regards to Tata Steel. Thank you so much for that, Vansh. Tapan, let me ask you about Tata Steel. The recent run-up that has already happened, and if I look at the consensus target price, no return potential that is expected from here on. Fundamentally, what would you advise investors to do? Because a lot of positives that are working out, you're talking about the domestic demand, which is expected to be strong. You're talking about the expansion that they have with regards to FY30. European prices are also firming up, which does... Because a lot of positives that are working out, you're talking about the domestic demand, which is expected to be strong. You're talking about the expansion that they have with regards to FY30, creating candidate from here on.
Honestly, I'm telling to my clients only that hold this stock now, because even I am quite positive on this stock. You see, the Europe division is doing well, and the reason already told by the analysts. And if you see even the domestic factor, I think maybe 9 to 10% growth will be there in the sales sector, and Tata Steel will be having a double-digit growth from here. Of course, they are have a lower leverage now, balance sheet much more cleaner, and they are going to have a much better, you can say, the sales for next few quarters, it looks like. And of course the margin is little bit improving slowly as a volume, and margin is improving, that is also good. And that is one of the factor why the re-rating is happening. Production expansion is also now slowly going to come from other you can say sites. So lot of strong order book, again backlog is already, visibility is there, and much more cleaner balance sheet. I think that is helping Tata Steel overall. I am positive from here. I think one can hold this stock from here also.
TTK Prestige earnings flashing on your screen right now. Net profit up 21.6%. The stock, by the way, is zooming in trade at 64.2 crores. The net profit number is coming in as a strong one. Consumer durables overall this quarter is expected to be a good one because of festive seasons kicking in. But that's the net profit number that's flashing on your screen. And the spike, in fact, in the counter has come in just after the earnings have been announced. The overall net profit number has come in at 21.6%. Up 21.6%. Revenue is up 11.2% at that 834 crore mark versus that of 750 crores. So revenue has seen a growth of around 11 odd percent. But I think what the street is liking is probably the kind of profit numbers that have come in. We'd also have to see as to what the EBITDA number looks like and what are the margins coming in at. But overall, the numbers seem to be fairly well, and that's why the street is liking, the counter and probably buying in. Tapan, I'll quickly come to you on this one, and then we'll also talk about MCX. But a quick view on TTK Prestige, if any, if you were to play the consumer durable theme, buying in. Tapan, I'll quickly come to you on this one, and then we'll also talk about MCX. But a quick view on TTK Prestige, if any, if you were to play the consumer durable theme, would this be a part of your portfolio?
Yeah, it's a quite a good stock. Now again, it's having a strong brand, and if you see, they are going to increase their store count. Also, cookware and appliances, this is one of the brand of which everyone knows, and the whatever profit numbers you've shown and the sales are quite good. And it's been maybe next 1 or 2 quarter, I think, as the domestic consumption grows, I think this stock will also be favorable. I think the factors will be favorable for this stock also. So yes, I am quite positive. Looking at the results, I think this can be one of the candidates which you can have in your portfolio for FM, these consumer durables and all that.
It's interesting over here because the reason why I think we're seeing this kind of a sharp uptick over here is also because in the first quarter itself, the company did witness a decline in its profitability, and that was one of the key concerns that investors had. In fact, a significant reversal in this trend is what investors were watching out for, and that's the reason why I think we're seeing such a sharp correction, because the profits have seen a significant growth. Your EBITDA, which has seen an uptick of almost around 30%, your net profit is up 21%. So that reversal in trend in terms of profit growth is one of the key positives that I'm watching out for right now. Apart from that, revenues are 11% growth is what we've picked up. And in terms of the EBITDA, there you go, 33%, 96 to 97 odd crores is what you've seen for a TTK Prestige. Let's see what the margins are looking like. I mean, the margin number is something which will be interesting to watch out for as well. So a strong number in terms of TTK Prestige. Tapan, you spoke about TTK Prestige, but apart from that, MCX was another story that we were covering on the back of the glitch. The stock is down 1.5% in trade today. What was interesting is yesterday MCX was up nearly 4%, and this was on the back of the bullion index that they launched, which was a new series. The stock saw gains of 4%. Do you think this correction in today's session on the back of a glitch should be used as an opportunity to buy MCX, or what would you advise investors to do?
See, MCX is having a very, very strong moat. No other commodity exchange we have. Again, the derivative segment is growing well. Again, yesterday launch is also very good. And yes, I do agree. Any type of fall in this stock, maybe 5-10% also, one should use it to accumulate, because there is no substitute. Like if you see in equity, you have BSE, NSE, two exchange are there. But here in commodity, MCX there, yes, NCDEX is there, but that is not prominent. And from here also, also, I think almost 25 to 30% growth will be there for MCX. Again, in commodity derivatives also, they are actually expanding. Of course, the valuation, it looks high, but no, because it's a monopoly and the moat is quite strong, I think this will always have that type of no valuation. But yes, I do agree here that no, any type of dip will be used as to buy MCX for the long term.
Okay, all right.
On this, I would want to also add a card trade.
Card trade, yeah.
Because a strong set of numbers that have been reported by card trade, and if you see the kind of growth and the stock price move on card trade, the initial spike very strong, did cool off slightly again, retract with gains of almost 9 to 10% on this one. So card trade is another one that we need to watch out for as well on the back of earnings. Let's see what happens to this one. But Tapan, very quickly, the three stocks that Varsha mentioned as well as a card trade, what are your views?
See, first, I think Jubilant ingredient, the new segment of which CDMO they are going to expand, I think that is quite exciting because that is the place where a good margin will be there. It's a lot of scope is there. Of course, the overall the company has performed well. Even the result you see, it's quite good. So yes, of course, the input cost inflation is there, pricing pressure is there, but a lot of scope is there. Of course, the overall the company has performed well. Even the result you see, it's quite good. So yes, of course, the input cost inflation is there, pricing pressure is there, but I think management is quite optimistic, so hopefully they will be able to tackle that. So yes, if someone is having this, I think based on the CDMO business, one can have it. JK Tyre, of course, has given a very good result. I know it's been doing well from last few quarters, and because auto ancillary companies are doing well as the vehicle sales is booming. Auto ancillary companies are doing well as the vehicle sales is booming actually. So plus the oil prices are down, that is also helping them to increase the margin, but profit is quite good. But the stock valuation, if I see, it's already gone up a lot. So one can wait for some time, maybe 5-10% dip. But yes, then one can start accumulating. Talking about Sona BLW after a long time has given a little bit of decent result. But yes, it had its own issue in the past. But still, I feel that I think there are many better auto ancillary companies one can look at it. Uno Minda is one of them. So I think one can have a skip if they want Sona BLW. Still, I think 1 or 2 quarter good result will help them. I think fourth stock was a card trade. Card trade, yes, it had a quite a good jump. Of course, if you see the forecast for the EPS growth forecast is also maybe around 20% jump from a year. Revenue growth is maybe around single digit. But one has to be a little bit careful. If someone is keep a stop loss and ride this thing, I think one should wait for a little bit deep to get into card trade again.
Okay. Tapan, I'll quickly come to you on this one. What's your view with regards to where KFin technology stands?
See, KFintech is in a strong position. Of course, the revenue growth is been strong because the mutual fund flow is good, and in future also it will remain good. I think I expect almost mid-teens revenue growth from here also. Margin is going to expand, and again they are expanding at an international level also. So both the places they are expanding. PAT margin is improving sequentially, slowly and gradually. Of course, as the promoter told, that technology and cyber risk will always be there. So they are going to invest. So yes, that type of capex will always be there. But no, because the flow is good of mutual fund, I think things will be on a better side. Business model is of a high margin. So recurring revenue mix will take care of most of the things. And at the end of the day, the margin is going to draw the stock price. So that is where I'm quite positive. And because of the mutual flow, I think if anyone is invested in the stock, please remain invested. I think it's having a good future.
Concern. Tapan, quickly your view on Bata. I mean, the footwear space overall has been under pressure, right? You take your campus activewear, your Bata, Relaxo. All of them have not been really able to pick up in terms of where demand stands. Any view with regards to the entire space and anything that you're liking in the space?
See, in the whole space, I'm quite skeptical, because in the past also we have seen the volume has not picked up. But again, the problem is they are getting a very good competition from the unorganized market. And that unorganized market is quite bigger than the organized market. And that is where the problem lies. And they are not able to capitalize on their margins also. Even the campus was one of the stock which we felt will do well, but that also little bit flattened afterwards. But overall, I feel that this competition is going to be there. Of course, this time the Bata results are lower. The reason you told already, but from here also the volume growth will be in a issue. Of course, they have to do a much more online. Even online segment also now quite e-commerce is doing well. So every company has to focus there also. But still, I feel this is a segment now where competition lies more, and that's why now I'm not quite bullish on the overall footwear sector.
Got it. Tapan, I'll quickly come to you on this particular counter. TVS Motors, what's the view like? The stock not doing much right now ahead of its earnings, but in the two-wheeler space, would this be a pick?
Yeah, it's always been my peak now from last few months, but no, it's a standout performer, but already gone up a lot. And a lot of expectation is there, as Pulnit already told, that no, the result should be good and the margin expansion should be there. And of course, EV sales now they are much ahead than Ola and even the Ather, and so they are leading in two wheelers actually, honestly. And the way they are able to change their business, especially the EV segment, is they are doing quite well. So I am quite positive. Let's see what type of result may come. Hopefully it should be good. But if it is one-off or something, if it comes down, I think it will be a good time to accumulate.
Tapan, I'll quickly come to you on your views with regards to this development.
See, it's quite a good development. Of course, it's proposed. But no, if you see the now, from last quarter onwards, if you see the results also, PSU banks results are much better than the private banks. Even the credit growth, it's almost in the double digit. Some of the private banks are still struggling with the one-time slippages and all that. But here, the balance sheet of, and also the NP is much more cleaner for PSU banks. Now the book, you can say the balance sheet is much more healthier. This is the right time now where one can call for the FDI. And of course, if the FDI comes now, 49%, and they can literally revamp the PSU sector, PSU bank sector. I think this is a very, very good move. If it happens, I think there will be re-rating of the PSU banks. Already we are seeing quite a good jump. Even today we are seeing PSU banks going up, but private banks are not going up. I think hopefully good times are ahead for the PSU banks.
Okay, Tapan, thank you so much for bringing us those details. In fact, Tapan, thank you so much for taking out the time and, of course, taking us throughout the show and giving us those insights. So thank you so much for that.